Hello and welcome. My name is Jenny Thorvaldson. I am the Chief Economist and Director of Data Development here at IMPLAN. And today I'm going to talk about the exciting topic of taxes, and especially as they relate to IMPLAN data. So I'm going to go ahead and share my screen now and start this presentation. And what we're going to talk about is the main data sources that we use, methods that we use, and some particular notes of interest. I'm going to show you some spreadsheets and data tables, as well as viewing the data, the tax data in the various IMPLAN platforms or, that we have, and how different ways of looking at different tax data. So let's start with data sources and methods. I will preface this by saying that the tax data are one of the more complicated data processes that we have to do at IMPLAN. We use a lot of different data sources, and there's different sources have industry detail versus, and some of them don't, and there's a lot of balancing that goes on and projecting of lag data sources. And we do have a very detailed document that describes all of our data sources and methods for the tax data. So I'm not going to go into quite as much detail as is in that document, but if you want more details, you can go to support@implan.com, and in the search bar, just look up, do a keyword search for tax impact report or something like that. And you will surely find that pop up in the top results for the articles that we have. Okay, so I'm just going to talk about kind of a couple different styles of data we get, and one style of tax data we get is collector-based. And what I mean by that is that it's by level of government. So we have receipts of tax data by federal government, by state government, and by local government, where local means county, sub-county general, which is basically city government, and sub-county special districts. So there's some special school districts, fire districts, all kinds of different special districts that collect taxes at the local level. And then and these collector-based data are by type of receipt, so that's good. So we get detail on what type of tax. So for some examples, property tax, sales tax, corporate profits tax, severance tax, there's excise taxes, motor vehicle license taxes, things like that. So we get a lot of detail on the type of tax, but on these data sources, we don't have any information on the paying or remitting industry if they are paid by an industry. Not all taxes are paid by industries, of course. Some are paid by households and things like that. But for the industry-based taxes, like sales taxes, and some industries pay property taxes, in this particular flavor of raw data, we don't have information on who's paying or remitting them. This is just based on who's collecting it, okay? And for state and local government tax receipts, we combine three main data sources. And I'm going to talk about them briefly and then show you them in the table, how they're different and how we combine them. The first two, they all come from the Census Bureau, but the first two are related to state and local government finances. And one is the survey, the survey that comes out annually, but because it's a survey, it is a sampling, so it doesn't cover all government units. And then an analogous one, it's basically the same data set, but it is the census of state and local government finances, and that comes out every 5 years, and it does cover all units of government. So these are county level data, and which is great, but they are lagged. When we use them annually, they're lagged by 1 or 2 years. Now the good thing is that we just use these to use them as distributors of current data. So it's not too bad that they're lagged a year or two, but you will see, I'll show you in a later slide how In some cases, that is not ideal that they are lagged. So I'm going to describe how we combine those two data sets after I describe this third data set, and we actually combine all three of them. So that third data set that we get from the Census Bureau is the annual survey of state tax collections. Now this is just at the state level, but the great thing about this is that it's current data. And we distribute these state level data to counties based on various proxies depending on the type of tax. So we might use personal income by county, for an example, to allocate state government personal income tax revenue to counties. And so we use various proxies depending on the type of tax. Now, how we combine these three data sets is that we first get them all into the same year. By inflating or deflating, we get them all into the same year so that the dollar values are comparable. And then what we do is, we start with the census because it is the most complete. And so but it's going to be older because it can be up to 5 years old, right? Since it comes out every 5 years. And so we'll start with those, and then we'll augment them with survey data. So if there is some new government entity that is now collecting data or collecting taxes, excuse me, and it shows up in the survey because the survey is more recent, then that value gets added to the value that we have from the census because it's something new that wasn't showing up in the census. And then any value that exists in the survey that also existed in the census, we replace the census value with the survey value because the survey is more recent. Okay, so we start with the census, we augment and replace values in there using survey data. And then we go in and for state level data that are in the census and survey, if there's a value that is in this annual survey of state government tax collections that's also in this combined two data sets that we've already combined, if there's a value in there that is also in the state level data set, we'll replace the value in our combined data set with this state level data because it's even more recent because it's actually current. So there's kind of a few years lagged census, and then a less lagged annual survey, and then a not at all lagged state level data. And so we combine those three in that manner. And just to give you a taste of what these data look like, I'm going to pull up SQL Server here. And this is where data team keeps all of our data. We bring it all into SQL Server, Microsoft SQL Server. And you don't have to pay attention to the query or anything like that, but just know, I'm going to point out that in this window on the left, I have pulled the data from the census of state and local government finances, and I'm just looking at Watauga County, Alabama, our first county here. And you can see that when I do that, I get 214 rows. Okay. Now on the right-hand window, I am running the exact same query for the exact same county, but I am pulling from the latest survey of the state and local government finances. And in this case, you can see down here that I only have 80 rows because it is just a survey. So it's a sampling. So not everything that's over here on the left is going to have a value over here in the right. So we just take the ones that are over here on the right side and we update the values that are over here on the left side. So if it exists in both, we update the left side value with the right side value since it's more recent. And then if there's anything new over here on the right side that isn't in the left side, well, then we'll go ahead and add it. So you can already see the ones at the county level government over here on the left side. Since I have these sorted by ID name, you can see that there isn't that unit of government isn't represented here in the survey. But if I keep scrolling down on the left side, eventually I'll get to, okay, the next one is Watauga County Emergency Communications, and that's also not here in the survey. Oh, but there, the third unit of government is the county school district. And oh, great, it over here in the survey does have updated numbers. So we're going to update those values. Okay, and then, so those are the first two that we combined, and then I'll pull up this third one, which is the state level taxes I was talking about. And so here, of course, we don't have county information, we just have Alabama as a state. So I wouldn't be updating anything for Autauga County using these data, but we'd update things for Alabama state level taxes in this combined one using these values over here on the left-hand side that are current for Alabama as a state. And you can see that we've got the same item codes and item numbers, TO1, and you see those item codes over here. So we have to match not only on the geography, but on the actual item code as well. And that's how we combine those three. All right, I'll go ahead and get out of SQL Server at this moment and bring us back to the presentation. Okay, so that was state and local. For federal government, we have the Bureau of Economic Analysis has NEPA tables, National Income and Product Accounts tables that have an amazing amount of data, but only at the national level. And so we get those from that data source and we distribute them to states and counties based on various proxies, again, depending on the type of tax. So in some cases we use population, capital income of persons, personal income taxes that we get from other BEA tables, in particular their regional economic accounts table. We have some personal income taxes at the state level. We can use that. So that's our collector-based data. So I talked about our so then we have national control totals for all these things, for state government, local government, and federal government. And in IMPLAN, everything is balanced geographically. So all of the states their values get adjusted to sum up to the national values. And then after we get the states to have good values, we make sure all the counties in a state all their values sum up to the state value that has already been controlled to national. So we have national level controls for taxes by level of government and type of tax from those BEA NEPA tables that I just mentioned. So we first distribute them to states, like I said, using a combination of the state and local government finances data that we just talked about, and some other data tables from the BEA's regional economics accounts data. And then we distribute those to counties based on, again, the combined finances data where possible and by other proxies where not possible. So I'm gonna hop out of here again, show you the spreadsheet just to give you a taste of our control totals. So we have a spreadsheet here that has the control totals. And here's what, just to give you a taste of this, we have the institution receiving, the institution paying, what type of transfer it is, what NEPA tables we got it from, the description of the line within that NEPA table that we're grabbing from, and then of course the value. And just a couple things to point out, you'll see that sometimes we have to refer to a couple different NEPA tables and their lines. So 3.6 is the NEPA table, 21 is the line right there. And then from that we subtract the value that is in NEPA table 3.6, line 26. Okay, and that gives us what we need here, which is Social Security tax, the employee contribution part of it, that employee compensation pays to federal government. One other thing to point out here is that this spreadsheet has controls for all transfer types, not just taxes. So you'll see some things in here aren't taxes, like most of these are. I put all most of the taxes toward the top for you to be able to see them, but you'll see right here rents and royalties. They also get paid out of other property income and they go to federal government. So not everything in this table is pertinent to taxes, but all of our tax controls are also in this table. Okay, and you can see them by, I've got them ordered by institution receiving, so we've got them by federal government here and then state and local government here. Okay. Oh, and I did want to point out, so households clearly pay some taxes. We talked about that industries pay some taxes and households pay some taxes. So here we have households paying taxes to state and local government here. Up here we've got them paying to federal. And just wanted to point that out that in IMPLAN we have 9 income categories for households. And so these national controls are just for all households together. It doesn't break them out by household income group, but we have other data by household income group. So here are 9 household income categories in IMPLAN, and we have various data for them that we can use as distributors to help us break out these tax payments and various other transfers to and from government and households among the 9 household income categories in IMPLAN. Okay, so we'll close that. Come back to our presentation. And then I also mentioned that we have, so far we've been talking about collector-based data. So collector being federal government, state government, and local government, and it talks about the type of specific type of tax. We also have industry-based data. So in IMPLAN by industry, we have information on employee compensation, proprietor income, well, on all kinds of things, employment and output and all of that. But and what's important for our taxes are the value-added data. And if you remember from, maybe you watched the previous, one of our previous videos where we defined what value-added is, and it has these 4 components: employee compensation, proprietor income, other property income, and taxes on production and income net of subsidies. Well, each of those components pay something in taxes, and or they contain a tax item that goes to the government. So employee compensation and proprietor income pay out payroll taxes, for example, to the government. Other property income is largely made up of corporate profits. So corporate profit taxes get paid, dividends tax get paid out of that account. And then taxes on production and income. From there we get sales tax, property tax, motor vehicle license tax, severance taxes, excise taxes, all kind of other taxes that are paid by industries. And all of these have to come together and balance together. So who's paying out taxes has to be equivalent to taxes being received. So all of this gets balanced throughout the process of producing these data. Okay, now let's get into some notes of interest and viewing some of these taxes within IMPLAN. Okay, so one thing to note is that all of the components of value added except employee compensation can be negative. And that's because profits can be negative one year to the next. We defined TOPI as taxes on production and imports net of subsidies. And so there are, when you subtract off subsidies that an industry receives in any given year, then your net TOPI can be negative because of that. So there are certain sectors that receive a lot of subsidies and they're going to be more negative more often than not. And there are certain industries that have negative profits more often than not, but it certainly depends on the region and the year. But wanted to mention that. Also wanted to mention that the breakout of TOPI by its type is not industry specific. So we have very industry specific, very good industry specific values for total TOPI. But the breakout of that between sales tax and property tax and severance tax and things like that is not industry specific. Now for most industries, that doesn't matter too much because most industries are going to pay kind of the average mix of those. But for some sectors, it really does matter, and you'll want to pay attention to that if you are analyzing one of these specific types of sectors in IMPLAN. One in particular would be wholesale and retail industries because they are the industries that remit most of sales taxes. So in there, when you're looking at TOPI impact results, if you've run an analysis on wholesale or retail, you're going to want to reshuffle those. The total TOPI number is good, but you're going to want to put more of that TOPI into sales tax than into things like excise tax or severance tax, for an example. And then kind of the opposite for extraction industries, where they pay more severance or excise taxes than other types of taxes. So that's just something to pay attention to. Okay, here again, we come back to the fact that most of our county level raw tax data are lagged at least a year. And so controlling like I said, everything is balanced and controlled to our current national control totals. And so that helps a lot, but local tax policy changes may not really be fully reflected in IMPLAN until a year later. So if for some reason a county decides no longer to have income tax, whereas they did previously, that is not going to be fully reflected in IMPLAN until a year after that happens, and we get the raw data that represent the year in which that change happened. But once that a change like that does happen, once that it shows up in the raw data that we use, it will be reflected in IMPLAN. And in fact, when I show you the tax data in IMPLAN, we're going to look at Washington State, which doesn't have personal income tax. And you'll see that it doesn't have that there is no income tax in that state in the IMPLAN data. So it does reflect eventually. Another thing that is surprising folks sometimes is that real estate property taxes are part of TOPI. So when we look at the IMPLAN impact tax results, it kind of, you'll see them broken out by the payer and then the receiver and the type of tax. And so the payer of these real estate property taxes is going to be TOPI, which is surprising to some folks because TOPI is paid by industries, but in IMPLAN, home ownership is treated as an industry. We have an industry called owner-occupied dwellings, and that represents home ownership. So the real estate property taxes that people pay on their homes are going to be a part of that industry, and so it's going to come out of TOPI. Okay, in the tax impact results in IMPLAN, there's also a column for households paying property taxes. And a lot of folks would expect that the home real estate property taxes paid by households would come out of that category, but or included in this payment. But that's not the case. The property taxes paid by the household institutions in your tax impact result are for other big ticket items like vehicles and boats. You know, when we have to go get the plates for our car, or excuse me, when we pay big tax bill for buying a new vehicle and things like that. And yeah, I guess we do pay our annual taxes on our vehicles. That's where those would show up. All right. And then also wanted to point out that in the default model construction, where households are the only institution that are internalized in IMPLAN, tax revenue is not spent and does not generate additional induced impacts. So what that means is in IMPLAN, when you run an impact, you're going to go to your impact results and you're going to see all the taxes that are collected, the federal, state, local level. And those are part of your impacts. They are tax revenue that were generated or lost if you're running a negative impact in your region due to this initial change in your region. So they'll show up there, we're counting them. But what I'm saying here is that those dollars that are earned or generated as part of your impact, the model doesn't then assume that the government goes and spends those and basically it's not assuming, the model doesn't assume that that governments will spend more money in your region as a result of the impact of your region. And that in the vast majority of cases is the best thing to assume and the most correct thing, because usually government budgets are set by other means and they don't closely reflect some change in your economy, like a new factory coming to town. They don't necessarily, your government isn't necessarily going to spend more because of that. That's especially true at the national level. The federal government budget process, as we all know, is very complicated and doesn't really matter what is going on at a local level in their decision making on that. But there are a few legitimate cases for internalizing state and local government, and most of the time that's at a state level model. So we do have an article on this. So again, if you go to support@implan.com and do a search for internalizing institutions, something along those lines, that article will pop up, and it describes in more detail what are the implications of internalizing different institutions and when you might be justified in doing it, which is very few cases, but there are cases. And just to clarify, what I mean by internalizing an institution is basically that you're allowing any money that or revenue that it earns as part of your impact for them to go ahead and re-spend it as government, using one of our government spending patterns. So when you internalize an institution, they are allowed to re-spend whatever they earn as part of the impact, and therefore it generates additional induced impacts in your results. So not usually justified, which is why it's not, the default in IMPLAN is just to have households internalized, but feel free to read that article if that is something of interest to you. Okay, finally, we're going to talk a little bit about where to view taxes in IMPLAN. We're going to look at the detailed SAM, the impact results, and data library. So the first thing I'm going to bring up is the detailed SAM. Now, the detailed SAM, SAM is the social accounting matrix, and it's basically a picture of the economy in table form. So all the monetary interactions that happened in that year in your region in table format. But there's so many rows and columns that we don't display it within the tool. You have to export it into CSV and then create a pivot table to put it into matrix form if that's how you like it. And that's how I like it. And I'm going to show you how one would do that. So give me just a moment here and I will pull up what I'm going to walk you through this pivoting. Most of you probably know how to pivot a table, but I'm going to show it just in case not. So when you export the full detail SAM in IMPLAN, this is what it looks like. So it's not that pretty right now. It's just a bunch of columns that tells you what institution number, what's its name, is paying which other institution, and what the description is of what type of payment this is and what the value is. And we're going to be most interested, we're going to just look at taxes today, but just to describe this for you in this first row, it's basically saying that oilseed farming is buying these commodities because the type of transfer is commodity use. And you can see that this is an industry code and that's a commodity code. And it's commodity use, so that means it's buying it as inputs. So all the interactions are in here. So these are industry interactions, but we're also going to look at institutions and taxes. It's all down here, just in later rows. But there's so many rows, we're not going to look at them like this. What we're going to do is insert a pivot table. And what we're going to do is we're going to say that institution paying is going to be the column. Institution receiving is going to be in the row. We want to look at the transfer description. We're going to do the receipts description and transfer description. Okay, and then the value over here. Okay, and then give it a minute to do that. And then I usually like to freeze my panes so I can see everything when we scroll around. And I'm just going to point out a couple things to you here and leave it at that. But I'm going to scroll down. So right now, let's look at column 1, which is industry 1. And if I scroll down to the bottom, or toward the bottom where we get to the government, so here in the commodities, you can see all the commodities that this industry buys, fine. But let's get past those. and get into our institutions. And the first thing I want to point out is that you'll see that none of these industries pays anything directly to government. So here you can see state and local government over here, and federal government, different types over here. And you see that it's empty. None of these industries are paying directly to government. And that's because if I scroll back up to our value added components, here we see industries are paying TOPI. They're paying taxes on production imports. And it's going to be TOPI, our institution with institution code 8001, that is going to end up paying taxes out to the government. And so is OPI. We talked about other property type income that it has in there. We've got profits. And so this institution is going to pay profits taxes out to the government. So we're going to see that by scrolling over along the columns to get over to these institution columns. So we're going to look at, we said 7001 right here was OPI. And indeed, if you see OPI should pay, oh, this, we're in households rows. Let me get down to the government rows. Had me confused. Okay, so let's see what it is paying. Where do I have this? Oh, okay. So let's look at TOPI first, this 8001 one. And here you can see all the categories that it's paying of TOPI right here to state and local government, non-education. You can see that it's paying motor vehicle licenses, other taxes, property tax, sales tax, severance tax, all that stuff. And if I scroll up, there you can see that TOPI is paying federal government some different types of taxes. So custom duties, excise taxes, and what are called non-taxes. And then over here, let's look at, so 5001 I didn't describe for you, but that's employee compensation, and 6001 is proprietor income. So if we look at those and what they're paying to federal government, we can see that they're paying social insurance taxes just as we would expect. And same with in the case of employee compensation, they also pay it to state and local government. For proprietor income, that only happens at the federal value. And you can see that for proprietors, they have to pay both portions of social insurance tax because they are the employee and the employer. So they're just paying that one side of it. Okay, so that kind of just describes that here in the detailed SAM, you can really see all the different types of payments to government. Now, as I mentioned, not all payments to government are taxes. There's things like transfers, they receive dividends because government invests, and also there are some, I think, some interest payments and things like that. So there's all kinds of good information here in the detailed SAM, but I'll get out of there for now. And then the next thing we'll look at so we looked at the detailed SAM, now let's look at impact results. So now I'm gonna hop into the tool. So here is IMPLAN, and I have already built some ransom impacts for us to look at. So here's my tax impact for the video, which is this video. And here are our impact results. I'm going to go ahead and click on tax so I can jump right to those. And making this really brief, I mostly just want to show you that here you can see some tax impact results. So this is for, I mentioned that I was going to do it for the state of Washington, and I did a brewery impact of $1 million in breweries. And so these are the tax results associated with that. They're coming the software is thinking about it, and there they come. Okay, so we've got our federal, county, sub-county, general, sub-county, special district, and state taxes, just like I told you. The main thing I wanted to point out with this being Washington is if you look at these categories of personal tax, if you see me highlighting those, you'll see that there is no category for personal tax income tax. And that's because there isn't such a tax in Washington state. If I go back to projects and I pick a different one, which is Petersburg City, and I ran an impact in there, if I click on the tax impacts and give them a moment to load, well, all I want to show you here is that when I run an impact that's not in Washington state, or is in a city where there is income tax, we will in fact see that category. So we'll just give it a moment to load. We scroll down, and there in our state tax impacts, lo and behold, we have the fourth category now of personal tax, income tax, and you'll see values here. Okay. So that's what it is in kind of just a really quick look at how they look like in impact results. And then I also want to show you there is something in IMPLAN that's new called the data library, and that's where not associated with impacts, but just it is more for exploring data. And so we have data going back all the way to 2001. And all in the same sectoring scheme using our most current data processes. It's a rerun IMPLAN data, and it allows you to compare over time. It allows you to compare across regions. We have in there a lot of really neat things like location quotients and things like that. But I do want to just point out to you that in the data library, we also have a dashboard for taxes. And in here, so if you, I guess I'll just do it from scratch for you guys. I had one set up for California, but it didn't stick. So I click on data library. I'll go to dashboards. We have a lot of pre-built ones. You can build your own, but if I go to the pre-built tax ones, there's some default states chosen here and default years, but you can change all of these things. So if I clicked on this, I could, instead of looking at those 3 states, I could put in California and hit run, and there I'm getting California's taxes over time. And there's tables below with more details, and you can do all kinds of things with filtering here. So that was just to give you an overview, very brief overview of the different places where you can find tax data in IMPLAN. And I think that will do it for today. I thank you for watching, and we'll see you in our next episode. Bye now.